So for the past few months, I've started doing something that I've never really done before, and that's day trading. I'm primarily someone who came from more of a swing trading background, and I guess based on how the market was, it wasn't something that I really felt like I ever needed to get into in terms of day trading. I felt like I was fine with the swings. Yeah, you wouldn't be able to rely on the day to day. You kind of relied on the market or the momentum or whatever, stock or swing you're in at the time. Could it be long? Could it be short? But then I found that realistically, that's not something that I could consistently rely on. And especially with the recent market action, like, yes, we've had some nice consistent moves up and down, especially down as of late. And yes, you in theory could be swinging, but with the threat of news and with how things have been choppy and how realistically, there's been a lot of traps set left and right, it's a lot more difficult than you think to try to swing. So it's become very apparent to me that if I wanted to be able to rely upon this money, then I would need to learn how to get better at this skill on a consistent day-to-day basis. And so what I've decided to do was start a small account challenge. And then also on top of that, we did start paper trading. In this video, what I wanted to talk about is the differences between paper trading and trading live. Now, obviously, one's fake money, one's real money. Yes, we understand. But what's more important is what's holding you back, holding me, holding yourself. That is what I want to dive into here in today's video, as I have some results over the past week or so of paper trading with fake money while also running the small account challenge. And the results couldn't be any further from each other, really, the past couple of days, the past couple of weeks. Now, I'm not saying that you shouldn't swing trade. I'm just saying that if you wanted to be more consistent and be able to rely upon and trading income at some point in the future, then swing trading is going to have its time and place, and it could be great icing on the cake. But for me, it's not something that I want to rely on, and mentally, it's not the best place because you go to bed at night not necessarily with any control over what is going to happen. Yeah, you can control your stops, but it's possible that you could wake up completely upside down on a position that you might not be able to exit until the market opens, when pre-market there's some massive news that comes out, and with CPIs, the Fed, different data readings we've been getting, it is just a wild west, and it's something you really just cannot, I found that you just can't rely upon. So we started the small account challenge, and it's been choppy to say the least. I mean, let's just dive into it. So if we take a look at so far the month of October, yeah, it's, I guess, a little bit better, been taking some smaller wins, but we're 50-50, and it's a good start. I mean, we're on the right track. I mean, profit factor here of 1.84, what that tells me is, hey, we're actually in a nice risk reward. Average winners 23, average losers 12, and on the small account, I don't really care about these numbers, right? The actual number doesn't matter. The profit factor is more important. What's more important, right, obviously, is bigger winners, smaller losers. That's what you want to see. But if you broaden this out and you were to go back over the entirety of this challenge, what you'll notice is that, yeah, we're a little better on the win rate. It's come down as of late. But overall, right, it's a lot of red. And it's not necessarily something that has been super consistent. And this is a live account. No, it's a small account, but it is a live account. And I want to dive into the differences here versus a paper account. And then also there are some other quirks. There are some other things that I think are playing a different role, at least in the paper trading versus the small account challenge versus a regular live account. So on the paper trading account, what you'll see is that we've had some really solid consistency the past 5 trading days that I've been doing this. That one red day, I think that was something that I either did by accident, or I'm not even sure, it might be an error on the chart, because I don't even think I was day trading on this account back then. But past 5 days is what I'm taking this and making this video off of. What you're going to see is that this is obviously a fake account. Well, not obvious, but it is a fake account. And if you zoom in, you'll see that IWM, SPY, QQQ, Apple, Tesla, those are some of the top stocks, or really the only stocks you've been trading on this account. Now, obviously, that's awesome, and the percent returns annualized are nuts, and I don't really care about that. But what's more important is that the way that I've felt with this versus the small account is completely different, and I'm going to be trying to unpack some of that here in this video. So obviously, there's one thing. There's the emotional aspect, right? Okay, if you have no emotions, then it's easier to trade. Yes, but why is that the case? A lot of that is because you've fully accepted the risk going in, right? There's always going to be an emotion. There's always going to be oh, yes, it was a winner, or oh, man, it sucks, it lost. There's always going to be that factor. Now, if you're able to control that to literally not give a shit, not care, it's going to be, 10 times easier. And on the paper account, you legitimately can have a feeling of I don't care, because it's not going to end you. You can just reset the account if it's a loser and reset back at where you were. It doesn't matter. You know what I mean? So that's one of the biggest things. Fully accepting that risk is really what it comes down to when it comes to lowering that emotional scale. But here's the biggest thing that I have figured out, or at least that I've found, and I think that you're going to relate to this pretty well. When it comes down to it, the paper account, knowing that I have as many trades as I want in my back pocket, no PDT restrictions, not having to worry about running out of buying power, not having to say, oh, it's only one trade today and that's it. Having the ability to say, oh, if it's a loser, all right, fine, I'll scrap it and we'll find something else. Either my thought process was wrong and the trade just didn't work, which is always a possibility in any situation, or there's something that I've done wrong and I didn't respect my risk properly and it's time to move on, or it is what it is and I got faked out or I got stopped out for whatever reason. And that's 100% fine. But I think having that mindset of the multiple trades in your back pocket, the collection of trades, you're able to kind of step back and look at it on the paper trading side from a full body approach instead of this has to work. This one has to work when you're limited to trades, for day trades, for PDT restrictions, or on the small account. I think one of the biggest things is that I'm definitely feeling that exact same way because I kind of just have that one per day. And so I feel like I've been micromanaging, in a sense, the individual trades, saying like, this kind of has to work. This has to be the best play of the day. When in reality, there is no best play of the day. In reality, there will be many plays in a day, many intraday setups, or some days there may not be very many, there may just be none, right? But there will be many setups over the course of days and weeks and months that you can look at from a paper trading perspective and have a different mindset, because you don't really need to worry about this one working. You need to worry about the full body of work being you're risking less than your reward, or you're winning more than you're losing on the full body approach. Like, that's what comes down to your edge, being on the plus side of profitability of that flip of a coin. And then at the same time, respecting risk and risking less than you're ultimately looking to gain. So the actionable steps at the end of the day here is use the paper trading to find a system that's actually going to work for you. Test strategies, supply, demand, breakouts, bull flags, like test a ton of stuff to see what you like, what you're getting a good feel with. And if that's something that you're getting a good feel with and it's starting to click and it's starting to work, then take it over to the live account. Now, when it comes to taking over to the live account, the small account challenge, like that is something that I think is certainly cool. People like to do that type of stuff, but realistically, what do you want to do? You want to have a cash account if you're under PDT, under 25K, have a cash account and start super small. So if you're, paper trading with 10K or 100K, whatever the number is, doesn't matter. Start small. Start with a dollar amount that you can 100% fully accept the risk, so that, yes, I know maybe you might not make much money each day if you consistently are profitable, let's say like your paper trading, but start there so that you're at least managing those emotions, get the reps in, and then from there, you can kind of critique things or up that size as you see fit. But I think the biggest takeaway is when you can look at things from a full body perspective and not a individual trade perspective. Because when you start looking at the individual trade perspective, you end up thinking, I think I'm right. I should be right. Wait, I've seen this happen before. It's always, or it's sometimes it shakes out the weekends, it pulls back, or it breaks through. It's a fake out. It's no big deal. I'm going to stay in. That's what ultimately leads to that big loss that wipes everything out. And that is where I think a lot of people go wrong. When people can be on the plus side of that coin flip, right? Of picking or having a strategy that allows you to see things more right than wrong, right, over time. But it really comes down to the approach of how you're looking at each individual trade. When you look at one trade saying this has to win, you're already screwed. You're screwed. You have to look at the entire body of work, the past week, 10 trades, 20 trades, 30 trades, and say, is it working? Is it not working? I don't care about this one. What about the next 5, the next 10? That's the biggest takeaway. Hope that was helpful. If you got something out of it, consider hitting that thumbs up button and subscribing to the channel down below. If you want to see more individual detailed trade recaps, we can certainly do more of that here on the channel. I think that could be something that's super useful, because at the same time, while yes, I've been in this game for a long time, swings, investments, whatever, I think it's something that we can all kind of learn from together at the same exact time, because I haven't really been doing this, to be honest, until as of late. And there's obviously a learning curve, and when we talk about it all the time, swing trading, day trading, investing, they're all completely different things. They might sound like they're the same, but they are absolutely not. So let me know in the comment section down below, and I will see you guys in the next one. Peace.